December 17th, 2025 didn't just deliver a new price tag for silver, it delivered a wake-up call. In a single year, silver surged more than 127%, blasting past $66 an ounce. On the surface, it looked like another commodity spike, another chart-driven headline. But underneath that price move was something far more consequential. The quiet conclusion of a long, disciplined strategy that had been unfolding for more than a decade, largely unnoticed by the West. While markets obsessed over cryptocurrencies, artificial intelligence, and soaring equity valuations, a different game was being played, patiently, methodically, and almost invisibly. This wasn't speculation, it wasn't luck, it was preparation. And now that preparation has reshaped the global balance of power around one of the most underestimated strategic materials on Earth, silver's story today isn't really about silver. It's about how wealth and influence quietly change hands. Not through sudden shocks, but through years of neglect followed by one decisive moment. And once that moment arrives, there is no easy rewind button. For most people, silver has always felt secondary. Not as glamorous as gold, not as futuristic as lithium, not as politically charged as oil. That perception is exactly what made it the perfect target. Because history shows that the most effective wealth transfers never focus on what everyone is watching. They focus on what everyone has stopped caring about. The pattern itself is old, and it is undefeated. It unfolds in 4 stages. First comes silent accumulation, when an asset is ignored and undervalued. Then suppression, when supply appears abundant and prices remain comfortably low. Next comes the pivot, the moment when access is restricted and the illusion of abundance vanishes. Finally comes the transfer, when wealth, leverage, and power flow decisively in one direction. Over the past 15 years, silver has followed this script with remarkable precision. From roughly 2010 onward, China began accumulating silver quietly. There were no grand announcements, no dramatic policy speeches. Instead, there were refining partnerships, off-exchange purchases, long-term contracts, and stockpiling that rarely appeared in public data. While silver was dismissed elsewhere as an industrial afterthought, China treated it as a strategic input, something to be secured patiently while prices were low and attention was elsewhere. By the time most observers started paying attention, estimates suggested that tens of thousands of metric tons had already been absorbed into Chinese reserves, both official and unofficial. The genius of this phase wasn't speed, it was invisibility. Then came suppression. For more than a decade, silver flowed out of China at prices that felt cheap, stable, and dependable. Global markets were saturated. Manufacturers in Europe and North America built their entire production models around the assumption that silver would always be available, always affordable, and always easy to source. Solar panels, electronics, electric vehicles, medical equipment, all of it quietly leaned on that assumption. During the same period, the United States was doing the opposite. Strategic silver reserves that once existed for national security purposes had already been liquidated. Domestic production covered only a fraction of annual consumption. The gap was filled by imports and dependence became normalized. At this point, if you're finding value in this breakdown, it really helps the channel when you like the video and share it with others who care about how these global shifts actually work beneath the headlines. The pivot, when it came, was subtle but devastating. There was no dramatic ban, no sudden cutoff. Instead, control. Export licensing, state management. Every kilogram of silver leaving China now requires approval. That one procedural change transformed silver overnight from a commodity into a choke point. The final surge of exports in late 2025, the brief flood that eased market tension, now looks less like generosity and more like the closing act of a long performance. Once the door shut, the price response was inevitable. The market wasn't reacting to speculation anymore, it was waking up to a new reality. And that's where the wealth transfer begins. As prices rise, those holding physical silver see their position strengthen. Automatically, reserves appreciate, leverage grows. Meanwhile, industries that once relied on cheap imports are forced to compete for dwindling supply at ever higher prices. For the United States, the cost isn't just measured in ounces, it's measured in vulnerability. Rebuilding a strategic stockpile today costs multiples of what it would have cost a decade ago. Import bills balloon. Manufacturing margins compress. Defense systems, energy infrastructure, and medical supply chains all feel the strain at once. And unlike financial assets, silver production cannot be summoned on demand. New mines take years. Refining capacity takes longer. Time becomes the scarcest resource of all. None of this is unprecedented. In fact, it has happened before, repeatedly. In the late 19th century, silver was quietly undermined as gold was accumulated elsewhere. The demonetization of silver contracted money supply, crushed producers, and transferred wealth upward. In 1971, the story repeated itself in a different form. Gold drained from U.S. reserves as dollars flooded the world, until convertibility was quietly shut. Those holding physical assets preserved purchasing power. Those holding promises did not. The common thread isn't ideology or conspiracy, it's memory. Those who remember that physical assets matter act early. Those who forget pay later. What makes the current silver episode different is not the mechanism, it's the preparation. This wasn't reactive crisis management. It was premeditated positioning. Accumulate quietly, keep prices low, encourage dependence, then pivot when alternatives are scarce. Silver's strategic importance was underestimated precisely because it sits at the intersection of old industry and new technology. It's essential for solar panels, where China already dominates manufacturing. It's embedded in electronics, electric vehicles, advanced medical devices, and military systems. As electrification accelerates, silver demand doesn't shrink, it intensifies. If you're watching this and thinking about the broader implications, I'd love to hear your perspective. Drop a comment below. Do you see silver as a one-off case or as part of a much larger pattern playing out across resources and technology? Because silver is unlikely to be the last example. The same framework applies to rare earths, battery metals, semiconductors, even gold itself. Control over physical inputs quietly determines who sets the terms of future growth. Financial innovation can't substitute for supply when access is restricted. Paper contracts don't matter if delivery becomes uncertain. For individuals and institutions alike, the lesson is uncomfortable but clear. When markets treat a physical resource as boring, irrelevant, or obsolete, that is often when it becomes most strategically valuable. By the time headlines declare it critical, the easy positioning window is usually gone. The transfer phase doesn't end quickly. It can last years as supply chains adjust and prices re-anchor at higher levels. During that time, costs compound, dependencies are exposed, and strategic leverage shifts hands. Silver's surge in 2025 wasn't chaos. It was revelation. A signal that the invisible phase of the strategy was over and the visible consequences had begun. The bigger question now isn't what happened to silver. It's whether the next iteration of this pattern will be recognized before the pivot or only after it. Because history is clear on one point: the pattern doesn't stop, only the assets change. If you found this analysis valuable, make sure to like the video, subscribe to the channel, and ring the notification bell so you don't miss what comes next. Thanks for watching, and I'll see you in the next one.